Good evening, everyone. Welcome to Admiral Markets webinar. My name is Chris. Nenad, of course, is with us today as well. And together, we're going to take a look at the British referendum on EU membership from a trading perspective. Last week, we discussed more basically the pros and cons of a Brexit for Great Britain, for the EU, basically from an economic point of view, geopolitical point of view, from a yeah all kind of aspects basically. Today we're going to be more focusing from a financial market expectation point of view. So that's our focus. But before we dive into the topic, two things. One is that you can ask questions through the hashtag here, hashtag AMBrexitFAQ. We'll be monitoring the Twitter feed there. So if you would be able to use that, that would be great. We would like to create attention for that, so that would be perfect. Other thing is the disclaimer. First of all, this webinar and the recording is shown to a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you and more details on that. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer, and you are also aware of the risk involved when trading. All right, so thank you so much for your attention. This is, of course, an epic, historic, crucial vote. I think that you've probably heard that a ton already, and it's true. There's no doubt about it, obviously. You know, it keeps coming back into the news because it is a big story. It is a big event. So we're going to be, discussing the angles of this as it goes live. But yeah, it is definitely a historic, event. And I actually was discussing in the live webinar this morning that I thought it was the first referendum. Well, that's actually not true. The British had already a referendum back in the 70s. I thought before they joined, but it was actually, I read afterwards, after the webinar, it was actually a referendum after they joined. So at that time, of course, the European Union had a bit of a different character than now. The integration of the common market, which is something that the UK wanted, has, of course, put things more closer together as a union. So the Brits have the opportunity now to choose. And is it going to be a Brexit or a Remain? It's a bit difficult to say it, but that's just another way of saying remaining in the European Union with the B in front. And that's a new term that has been brought into recently into the Twitter feed. So I'm not sure how long it has existed, but so nowadays you see circulating Brexit and Remain. Well, we'll find out Thursday. Well, actually Friday, won't we? Because Friday around 5 a.m. they expect the results. Some indication, a good indication. Cameron, the Prime Minister of UK, is expected to hold a press conference on 7 a.m. So it's more Friday morning that we'll really have the result. But throughout the evening and night, there will be more and more results available. So I guess we'll know more and more what the likely result could be, unless it's really a cliffhanger and perhaps only a few votes will make the difference. And that is possible, which is a bit strange that only literally a few votes could make the difference. Ironically, if the UK, the Brits do vote for exit, then they would actually have a different opinion than the parliamentary, democracy that is representing them, because they are in favor of staying. Actually, a majority, I think even a decent majority, is in favor of staying. So that would be an interesting difference there. All right. We're going to talk about markets, though. We're going to be taking a look at pounds, some dollar pairs, some commodities, and then we'll dive into also stock indices and stocks and yen pairs. So that's all, the agenda for today. First of all, one of the latest polls, the poll of polls, basically, that's always interesting because it's a rolling average of different polls. One poll could always have a higher number, and one could have a lower number, but that doesn't necessarily maybe indicate a huge trend change. As you can see here, we had a lot of fluctuations in these individual polls, but this is an average, which I think says more. And it's still at 44-44, right even with each other, 11% undecided. So it seems to be very dramatic as we enter one day before the um, the referendum and voting on Thursday. So, what does the market think? Well, the market doesn't think, but basically, what you can see from large participants in the market, if you ask them, if you have basically, the percentage I read was that the market participants, the major market participants, think there's a 30% chance. So that is, I guess, below what you would expect maybe, because if you look at the polls right now, right, it's right even, it's exactly the same. So you would think maybe it's closer to 50-50. It's not. It's actually 30% at this point. So at this moment, we could basically say that the market is expecting, not favoring, but expecting, right? Is anticipating rather a stay of UK rather than an exit. Why? Well, I guess maybe because it's difficult to say. They think probably choosing for change is a bit more difficult. If you look at the previous two referendums, no, not previous two, I mean other referendums like in Scotland, they also chose to stay. So, it's difficult to say, but that is at this moment the expectation. All right. So, what does that mean though? That means at this moment, there's not probably the Brexit is not priced in probably in all the financial instruments. All right. So as you can see, actually, it's rather expecting a Remain, right, for the UK to remain. So if there is a Brexit, all right, this is what we're expecting in these tabs. We would expect a risk-off environment, the pound to go down, euro to go down with it, oil to go down, gold up, and dollar up. Now there are other consequences. I don't want to go ahead of Nenad though, because he'll dive into that, regarding other financial instruments. Okay, but basically, the pound is expected to get a battering. All right, and it's expected to see a lot of bearishness. How much and how strong, could it's difficult to say. It could take us by surprise and be a lot more than we ever expected, or maybe it's not as bad as we expected. It's difficult to say. But from what I've saw in a poll done with financial trading managers from institutions, and this was like a couple of months, I think 2 months ago. So I think that maybe this could be different now. But at that time, 29 out of 34 thought that the pound would at least go below 135. Now the pound was maybe a bit lower at that time, but the pound now is, up in closer to 150, right? Let me check the exact number right now for you. 146.50. It hit 147.70, right? Just recently, a few weeks ago, it was up also around that level. All right. So obviously, if that 29 out of 34, right, that's about 80%, I guess, is expected below 135, well, that just in itself already is more than 1,100 pips. Now, how fast will those 1,100 pips move? Will it get there first of all? But how fast, if it does, those are questions up for grab. But I think that it really could be a shocker to the markets. The euro will go along with it. I think in first reaction, probably not as strong as pound. Obviously, pound most affected, and we could see gold and dollar up. Why is that? Because those are basically safe havens. Those are in times of indecision in the market, or in times of when times are rough. Let's say this is a safe play. This is where basically investors go into safety. And gold and dollar are known for safety, and Swiss franc, for instance, as well. All right, among others. So yes, indeed, Arne, and that's something that actually Nenad will discuss too. So Now, why? You might ask why. Well, obviously, yeah, the thing is that the reason for this, for these things to play out, that we expect that to play out, and not only us. I mean, you could take a look at other articles, and they would be saying the same, is because of the uncertainty. Market does not like uncertainty. There's a lot more certainty with the Great Britain in the EU. There's a clear, development path. There's nothing of a shock to the system. There's nothing changing dramatically. It's steady as it goes. It continues as we expect. There might be changes in the EU in the future, but those will be, well planned. Those will be all laid out and discussed and, planned out. Well, this is an event that is basically like a cliffhanger. It's a one-time thing, or well, who knows, maybe 40 years from now again, but a very rare event, and there's a result. And if it's an exit, basically it distorts, it changes the entire paradigm, it changes the entire landscape. Well, if the UK stays, it doesn't distort that. That's basically the reason. It doesn't mean that that you should be in favor or against it, depending on your financial situation or involvement. You might have a preference, but this is just a pure, basically, reaction of the market based on the shock or no shock. All right, it doesn't judge it, but it does react to it, and that's why it reacts to it. In the long term, things could be different. That depends on a lot of factors we talked already about last week, so I don't want to dive into that again. But in the near term, this is what we're expecting, because just of the changing environment. There are a lot of struggles that are going paired with that exit, negotiations between the two entities, EU and UK, and there's just a lot of difficulties that will go along with that. So it's basically a new story that starts from scratch, and the markets are gonna live through that as it develops. All right. So large impact and volatility, as I already said, we're going to see a weak pound. Now you're going to see, as a response, a lot of things happen, but you are going to see high officials try to calm the markets, try to show the commitment of UK, perhaps to keep the access, keep the markets open. The markets will be open for 2 years, by the way, because that's an automatic negotiation period that is there based on the previous treaty. So it's not like it's instantly over, but the UK is going to try to do its best to calm the markets, to try to prop up the pound that it doesn't fall too much. But in reality, despite the calming words, it is going to be a very volatile and tough environment. All right, that's not going to change, and it's basically things are going to have to settle down. Things between the UK and EU will have to realign themselves, and how they precisely match up and how they will develop is really something that's up in the air, and really something that is going to be decided as things go along, and that will probably not be with Prime Minister Cameron, because he was so in favor of the UK staying in the EU. If there is a Brexit, it will probably not be Cameron negotiating the exit of the UK. So because the market indeed, let's see, we had a question here. If Brexit is mostly priced in by the market, what are the implications of Bremen on the euro dollar? Yeah, you see, I don't think they are actually priced in. So they're partly priced in, but I don't think that, because the market, if we look at the 30% level, the 30% percentage I just talked about, there's still actually at this moment more a expectation that the UK will stay in. So if that's not the case, then we'll see a full reaction of the market to the most likely exit of the UK. Unless something very strange happens, like a second referendum, if it's very close, but I don't think that will be it'll be very unlikely probably. And then we'll probably see the full reaction of the market to that. So we are going to talk about the opposite if the UK stays in, and we'll dive into that in a second. Now, here you can see a bit more numbers. This is, I think, Morgan Stanley numbers. I hope I'm correct. So the impact in the next 6 months performance of these currency pairs, and we see that there is a big difference here on the pound and euro. But actually, in 6 months from now, more downside expected in the euro than the pound. Interesting enough. If we have a remain, then we expect a flat number. All right, according to this research study. So that means 6 months from now is basically the end of this year. So that means euro and pound exactly, that's the expectation, roughly exactly where it is. Light appreciation on the euro, slight downside on the pound, but otherwise, we will be basically right at where we are, which is 1 for the euro, 112.50. Be half a year from now. Whereas if we leave, then we can see huge movement. All right. Okay. Now, how about the opposite? Basically, it's just a mirrored response, right? We're going to see all the things basically in the opposite. We're going to see risk on, we're going to see pound up, euro up, oil up perhaps, and gold down and dollar down, right? But we're not going to see, in my opinion, the same volatility, the same movement. It's not going to be that same emotions. It's not going to be that same kind of dramatic response, in my opinion. We're going to see some response, but I don't think it's going to be the same. That's because, of course, in my opinion, this is what the market's expecting. So it's confirming what the markets expect. You're going to see a bit of movement because there is, probably a tad of Brexit, kind of factored in. So that's going to be the response, but it's going to be a lot less. And it has all to do with the market expectations, 30 to 70%. All right, that is the founding pin, the underlying support for this, and that's what I would expect. We expect with the UK staying in the EU. All right, so let's take a look at some technicals now. Oh, okay, there we go. All right, sorry for that. Let's take a look at this. All right, so this is the euro dollar daily chart. We had some downside as I expected today, basically in our live webinar, and it had everything to do with basically two simple things. First of all, if you look at the daily chart, we can see that we are in an uptrend channel, right? But we are also facing resistance like this. All right, so from my perspective, earlier today, when price was retesting this trend line here on the hourly chart, I didn't expect a breakout. And that has everything to do with the mentality of the market, the psychology of the market, I should say, actually, prior to a big event like that. If you have a big event like that, price is not going to typically move far away from the average price because there's not going to be enough participation, there's not going to be enough demand to push price into any one direction. Price could move, but perhaps only because of liquidity, lack of liquidity, perhaps, well, not lack of liquidity, but just because the market is not involved as much. So, you could see maybe some shifts because of that. But otherwise, you're not going to see probably big movements just as a technical kind of movement. Okay, you might see movements based on polls, based on rumors, based on news, but to have technical breakouts or let's say technical trends develop just before a news event like that is very, very unlikely. So from that point of view, I didn't expect this break to happen to the upside. I'm expecting price to remain basically in this zone between these support and resistance levels, stay in this consolidation and bounce back and forth. Now, if it would have broken out, I didn't expect that breakout to go anywhere because of the same reasoning. I would expect basically to see a false breakout because of that same psychology. And that has everything to do just with the market expectation of that event. We're not going to see a sustainable trend breakout right in front of that event. What could happen is that the market is going to break out of these trend lines to up or downside when we get the news event. When we get a UK that stays in the EU, I would expect this resistance trend line to break to the upside. If we get a UK that leaves the EU, I expect this trend line to break to the downside. So let's take a look at this from a daily perspective. So if we get to break to the downside, we're finally breaking this uptrend channel actually that's been lasting since November last year for the last 7 months. And this could be basically a trend changer. Okay, we can see this is an uptrend channel. Yes, it's a very shallow uptrend, but it is an uptrend. We'd be breaking that. If we break the resistance, however, with the green arrow, we're going to see a continuation of this uptrend, and we'll probably see price challenging the resistance up at 115, 116, 117, and perhaps all the way up to 120, depending on how much momentum we really have. Whereas the break to the downside, all right, on the euro dollar, I think we could really very quickly actually break through 111, and I think there's a good chance we'll be testing 105 very quickly with during a Brexit, and probably break that bottom as well, and start going to parity. I think that's the kind of volatility we could expect from downside. So now the uptrend channel that I just showed you is really not an uptrend as much as a overall correction when we look at the weekly. Weekly, you can see price is going sideways like this after a strong momentum to the downside. This correction and consolidation, therefore, from a wave perspective, is still most likely a wave 4, and therefore still a very good chance that we'll see a downside pressure after that to break the bottom for a wave 5 and continuation of this downtrend. Right? The wave 4 structure does not change unless price breaks above 120.75 or 121 to make it easy. That is the 50 fib right here. We respected neatly the 38.2 fib at 117. Price typically, or I should say wave 4, can retrace up to 50. It does typically not go above it. So any movement above the 50 makes a wave 4 very unlikely. Not impossible, but unlikely. Anything below the 50 could easily be a wave 4. And as you can see, despite the fact that the last 6 months this price has been trending up, we can see that uptrend channel on the daily chart is really a corrective channel with a very shallow angle on the weekly that is part of a bigger sideways move. So if that support line breaks, we have even further reason to expect a challenge of the bottom, and actually I would say most likely a break below that as well. So it's going to be such an event that has very much long-term impact on these weekly and monthly charts. When you look at FOMCs and NFPs and interest rate decisions, those, and you look at the daily candles, all right, that appear on those events, those are typically, not every one of them, but a lot of them have a significant impact on the direction of the market after that. I wouldn't be surprised if Thursday is such an important day as well. If we have a Brexit, we could have a daily candle that literally is something like this. All right? Maybe even right down to the bottom with hardly any wick here. Well, it's probably not Thursday. Probably because, well, it depends how the daily candle is composed when it starts and ends. Because we're going to probably have the Brexit at around 5 a.m. London time, so it could be Friday as well, the Friday candle. But you get my picture. It could be a huge, huge daily candle to the downside. On the other hand, if we have a positive kind of positive is maybe not the, let's say, a confirmation of the market what they expect, which the market probably sees as positive. Let me put it that way. Then we maybe see a daily candle like that. I wouldn't expect as big as a bearish candle. So probably something like this. It's a bullish candle that would expect up, continuation, and then I would expect price to go up to the 50 fib most likely if we have a candle like that. All right. So let's see, mini turmoil. Well, there was. I did that very often, Panda, actually, for very long. But there was people asking actually to take it away because they could not see the chart fully. So since like 2 weeks ago, I think I started to do that less. But before that, you would probably see consistently that I had the mini terminal on it, the mini terminal box. And you can check the webinars, if you want, and probably would be better actually to talk about this in a different moment than in a live webinar. Alrighty, folks. So let's take a look at the pound. The pound, of course, and we could put it on so Panda has a good view of the mini terminal. So let's take a look at pound. We can see basically, a reaction to the upside here, and that obviously is in a consolidation as well, pretty similar to the euro dollar, but a bit different because this consolidation zone is a bit smaller. Okay, and we can see that price is going to have an opportunity to move to the downside with the Brexit, I do believe. And if we take a look at the monthly chart, you'll see why. We're going to see price basically retesting all-time lows here at around 139-ish. Let's take a look exactly what those levels are. 135, 137, 135. All right. So there we go. Those levels will be basically the targets for downside, but we can see even a continuation further down. All right. So now you're going to want to be very careful. So keeping this mini terminal open all the time when you're trading could be very good advice because you can react to price a lot quicker with it than if you have to, move into these tabs here. So that's always a good idea. But besides mini terminal, you really have a lot of things you can use with regard to Supreme Edition. 65 plus tools such as Alarm Manager, and I think the alarms could be ringing a lot on Thursday, so that is always useful, for instance. And a correlation matrix, that could also be very useful because the market is going to respond in different ways. So keeping an eye on that correlation matrix, and I'll show you right now, could be useful. You can do that to see how the pound, for instance, is responding to the euro dollar very simply by dragging from the Supreme Edition right here. Oh, I have a demo at this moment, so let me just switch that quickly. But the pound can basically, all in all, challenge that 135, and you can see from those fund managers as well that that is what they expect, and perhaps even set a lower low. All right, and that is something that could easily happen with the Brexit. Now, we would have in that case actually a full-scale downtrend yet again. All right. Now, if we don't, we'll talk about that in just a second. But in the meantime, let me show you this correlation matrix I was already talking about, and you can see basically the pound and how it responds to the dollar Swissy, the euro, obviously, and the dollar yen, and many other currency pairs. All right, and you can change here what time frame you're looking at as well. Incoming mail. All right, so that's very useful on a day like Thursday, well, any day, but maybe specifically even Thursday. And but there are other tools that you can use as well to monitor and measure and keep the track of everything for your trading purposes. So the upside, if we look at the weekly, you can see that price basically, if we put a fib from here to here, all right, is at the 50. So if we get upside, I would expect a break above it. And we can really start challenging the 61 and the 78.6 fib. In that case, from an Elliott wave perspective, I think that this could actually be an ABC correction. And this could just be a bigger correction up to these fibs at first. And we'll have to see how price responds to those levels. It doesn't make sense to look too far down the road and start speculating on all kind of scenarios. But I think that upside to these two resistances is a decent probability, and we'll have to see how price responds to those levels. We'll discuss that in those live trading webinars next week as we get more information. All right, but if it does continue lower, in that case, it could easily be a continuation of this momentum. This is just a consolidation, in fact, and I think we can see from Elliott wave's perspective, perhaps even a wave 4 and this a wave 5 for downside. All right, quickly, I'm running out of time. Let's take a look at the dollar yen and gold. I'm going to be a bit quicker though now, so hold on to your hats. Let's take a look at this one right here. Let me get rid of these oscillators. It's not the purpose of this webinar. All right, there we go. Dollar yen definitely bearish pressure, of course, and this is probably not going to be a pair. Both have a bit of a risk off sentiment, so I don't think that we could probably just continue to 100 or maybe, I would say continue to 100. I don't think there's going to be something specific. I think that Nenad is also going to take a look at the yen pair, so I'll leave that more up to him due to time also. And let me just take a look at gold. Gold could be an interesting one to look at. All right, let's take a look at the weekly chart. I'll get rid of that right here. And we already see upside momentum, so that could easily continue. You can see here some good couple of 3, 4 candles to the upside here. So I think we can see that continuation on the gold levels, technical levels to keep an eye on. All right, basically, if we put a fib from here to here, all right, we want to keep, probably the target is 1400. I think we can get there, and even further than that, because we got a good leg up here. So we're just looking for continuation up to these targets, 14, 15, and 1600 from a monthly perspective. All right, just to give you context, 14, 15, and 16 are here. We'll be basically testing this bottom back again. All right, that's the potential upside. Now downside, I don't think there'll be a big movement. We can maybe just retest these fibs again. That could be support levels again. I think especially the 50 fib around 111.50 could be very important, just because we got bottoms here as well. All right, so that could be very important around 111.30, 111.50. All right, folks, well, hold on, because Nenad is going to take a look at a lot more, including equities and stock indices. It's going to be very interesting. So let me pass that on to Nenad right now.
Thanks, Chris. So excellent introduction and outlook. And now we will delve a little bit deeper into possible trades and what you could make of Remain or Brexit. So we don't know what will happen. As far as I am concerned, as you know, I still keep the same outlook, although I'm a bit reserved, but I still think that UK will remain. In European Union, as I thought 9 months ago, but of course chances are that let's say like 52.48, 53.47, in my opinion, for Remain scenario. So I still think, it's my own poll, it's my own opinion, 53.47, and let's say a week ago I was 50-50, now I'm 53.47, but definitely it's not me who will decide, nor you, so the majority will decide, and we need to be prepared for any reaction. So guys, there could be some trades. Now if you're willing to take some risks, of course, or simply keep this as analysis, then don't look outside. We will continue with setup. So general outlook, Remain versus Brexit scenario, currency analysis, equities, and guys, please use hashtag #AMBrexitFAQ on Twitter for all questions, guys. This is very important because we all heard over Twitter. Yeah, okay. So let's see. Current polls, guys. This is what current polls are saying. Chris has already shown you, but I will be also free to show you some interesting facts that poll of all polls, Financial Times has it as 44-44, YouGov has 44-42 for leave, then Orb has 43-46 to remain, Salvation 45-42 remain. Also, according to Bloomberg, latest information I had was that Britain will remain. In UK, Oh, sorry, in your in European Union. Yeah. So according to all these polls, the biggest poll and the fundamental poll for me is definitely Financial Times, because that is the poll of all polls. But of course, using my common sense, not just polling, not just those numbers, the thing that I speak to a lot of people who are actually living in UK, and I also speak to other traders, and I follow news. So my opinion is 53-47 for Remain. Yeah. So that is what I think. Now, Remain versus Brexit. Quick facts. We already talked about it at our first webinar. That was part 1 that we did for the previous week. So I will just be quick with this, and then I will move on to currency analysis. So in the case of Remain, guys, this is important, okay? No matter whether you will try to trade or you will try to actually analyze just for you the market, the thing is that in the case of Remain, upside will be restricted. So don't think there will be a huge upside, okay, guys? I'm still referring to pound dollar, okay? I think that it has the possibility to jump to 1.55, but 1.60 should be reached later, not immediately, okay? So the immediate reaction will be restricted. But if we see an exit or Brexit, well, definitely it will be huge, guys, okay? Much bigger impact will be felt if UK leaves European Union, okay? There is no pricing in, Martin. Guys, there is no pricing in, okay? Nothing is priced in currently. Believe me, guys. There will be movements, okay? Nothing is priced in. This is, market is calm. This is nothing. Now, what happens last few days is that market is pricing in Remain, not Brexit. You can see that pound dollar is going up, right? So market is a bit, it's trying to price in Remain scenario, but there is still more room to the upside. As I said, I think we could see 1.55 after the actual result. But the thing is, this is important. In the case of Remain, upside will be restricted, but downside should outweigh upside. That is the case with Brexit. Okay. Now, guys, I'm not sure whether you have heard about Bitcoin. Bitcoin is a virtual currency. Okay. Other markets should adopt it. I think soon. I think it's basically slow to adopt, but it could be adopted. But Bitcoin is very interesting, also, guys. And here you can see tweet from Stockbeat, and they say Bitcoin has tripled over the last year. Okay, today there is asset selling and so on and so on. Guys, what they know or they don't know, I don't know if they know about it. But this is the thing with Bitcoin. I reply to their comment. One thing about Bitcoin, there is no central bank to devaluate it. So during risk off, it goes up, because that seems to me that Bitcoin is a defensive asset. Okay, so you know, guys, when you do the analysis, technical analysis is great, and it's good for trading actually, right? Because you make money with it. We make money. Our analysis, session recaps, right? But this is other thing. Now this is that we are actually going into the market that we don't know much about it. So we cannot just say we need to use technical analysis. We need first to understand what is moving that pair. So there is no pair. There is a virtual. Bitcoin looks, it's not commodity, so it's like a currency for itself. But one thing I know is that there is no central bank to devaluate it, right? So I'm using my own logic. During risk-off, it goes up because it's a defensive asset. And think about this, guys. Okay, so I don't have a Bitcoin on Admiral Markets, but you can watch it, follow it. I know there will be a lot of people who are watching this and who will be watching this after we upload it, because this is being recorded. And watch for Bitcoin. It's very interesting to me, guys. Okay, Bitcoin. Okay, and this is the thing. Seems to increase its value during risk-off because it's a defensive asset. Okay, risk-off. Pound dollar goes down, Bitcoin goes up, and you see now Bitcoin is going down because pound dollar is going up. So it seems to be a negative correlation between pound dollar and Bitcoin. Now let's move on to DAX first. DAX will be impacted under Brexit scenario, guys. Why you will see the impact on DAX is because one of top 4 trading partners is at risk, and that is UK. UK is in top 4 trading partners. Okay, so DAX will be impacted under Brexit scenario. If it happens, I presume that we will see a quick drop to 9,008 points, and it could be an immediate drop. Further key fibs are 96.15, 95, 94. Okay, I will show the chart. And what is important is that it might drop 2 to 3% per day, guys. So after the initial, the pair should continue falling. Okay, so what you do is, we call it sell the rips. Opposite of buy the dips. Sell the rips. So we want to actually sell on rallies, guys. Now for you who want to trade it, there could be, as I say, a quick drop to 98.00, and it could be an immediate drop. 96.15, 95, 94. Guys, DAX is much more heavier than Forex. I mean, Forex pairs, most of it. DAX is, it's equity, right? So we are looking at equities. Equities are moving much faster than Forex market. And you should know that if euro dollar, let's say, make 20 pips, DAX can make 100 pips. So basically, what should happen is, if we see a Brexit, then it should drop 2 to 3% per day. 2 to 100 to 0 be exposed, and we say sell rips. This is how it looks like. Okay, this is how it looks like. So this is DAX daily chart. Okay, you see now the market is actually ranging here. You see the market is ranging. There is up, down, so it looks like M, right? But this M hasn't been developed, because if it had been developed, it will drop heavily towards levels I here. So the point is, this will be broken, okay? Once, if we see Brexit, right? So this is the worst case scenario, guys, okay? Today you see the price 98.00 will be tested on Brexit. Further levels will be exposed, and there is a potential for the further downside towards 87.00. So if we see a Brexit, the currency, the equity will drop, and we will sell on rallies, guys. Forever, for all of you who will trade DAX, okay, you should definitely sell the rallies, okay? So here, there you see there is a potential M, but this M hasn't been developed because markets now are in waiting mode, okay? So in the worst case scenario again, we will see a quick drop to 98.00, and I'm thinking that 95 will be tested at key level, okay, here. And you can see it, these are key levels, fibs. And we could sell next couple of days or maybe weeks, let's say towards 87.00. So that is the case with DEX. So on Brexit, as I say, this should go down, drop down. So if you want to trade it or simply analyze it, this is it, guys. This should downside will be closed and even 87 possible. Okay. Now Maris is asking, when should we start trading? Well, guys, be careful. Okay. I think that the earliest results, but I'm not sure, guys, but I think the early results will be announced at 4 a.m. So it's 4 a.m. morning, my time. It's 3 a.m. London time. So it's 2 a.m. GMT, right? So, yeah, 2 a.m. GMT. So we need to be, okay, ready for that. Okay. Well, all brokers will increase margin requirements, guys. That is normal, guys. So please, before you think about trading, check your margin. You should have all received a letter or an email from your brokers. I know that Admiral Markets already sent it for new rules for Brexit, for Brexit referendum. Margin has been increased on all GBP pairs, including Euro and all, I think, Euro indices, okay? European indices. So please check it before you actually start a trade, because margin has been increased. It's normal. They need to protect themselves, guys. And if they protect themselves, it will also protect your assets too. So definitely Admiral Market is protected, so don't worry about it. I also gave a few advices to risk department, and everything should be okay, right? The thing is here, okay, the thing is here that you want to make pending orders, right? If you want to trade it immediately. Okay, it's not that you make market order, because it will be chaotic. I think the spikes will be immediate, and we could see liquidity gaps. Okay, liquidity gaps could also happen. A lot of things could happen, guys, especially if we see Brexit. So I'm not betting on Brexit. As I said, I still think that 43, 47, in my own opinion, towards remain. So the thing is, if you want to trade it immediately, you make pending orders. If you want to trade it after the fact, after the result, you should either buy the dips or sell the rips or the rallies, right? So watch these levels to the downside if it happens. Now, remain, well, logically enough, UK as a trading partner would remain status quo. So it will be okay. We should see upside reaction, but that upside reaction will not have a strong impact as we would have seen on Brexit scenario, right? So 10,600 to 688 should be reached. 10,942 is next target. So 10,942 next target, and it could take a couple of days of risk on sentiment to reach these targets. We should buy the dips if we see a remain. Okay. Now, yeah, let's see the chart. Actually, I will open the chart now. So, okay, guys, and this is it. Okay, let's see. Here. So 1060 to 688, guys. this should be reached. This is huge number of pips from where we stand now, and you can see it's being a bit priced in. This is weekly chart. You see weekly candle, guys. This is a pin. This weekly candle is trying to reach confluence 10.097. It's 23.6 of this previous swing, and this is EMA 89. So guys, above this could easily break out. If this remains kept before referendum, this should spike up towards 10.688. So these will be important levels. On my analysis, this could be final target, okay? 10.42.942, okay? I will mark it like this. 10.942, okay? So this could be the target for the move, okay? So this should spike towards this, but I don't think it will be immediate, right? So the immediate spike should see some buying E9 and 10.097 towards H3 resistance now. But during next days, if we see risk on, then this should be it. Okay? Okay, this should be it, guys. We could see these levels. As I say, the upside will not have such a strong impact as downside, okay? But still, you see, it's generally, guys, if you take a look at it weekly, that is bearish, right? High, low, lower, high, lower, low, lower high, guys, right? Lower high. So even this level could be broken on Brexit. But see, this is maybe the biggest support down there. But I'm betting on this if we see Brexit. So the thing is, this will not have such a huge impact or if we see a remain, because when risk-on sentiment subsides after the remain, there could be additional selling because the trend might continue. So initially, guys, either it will go towards these levels or it will go down, and for further development, either sell the rips towards these levels or buy the dips towards these levels. Dollar yen, or so-called ninja, should follow equities, guys, okay? It should follow equities. The thing is, guys, that if we see a Brexit, UK assets will drop and equities, better to say, should follow, right? They should follow it. There will be a risk aversion, okay? As you see, and probably as you could see, and you probably traded it, dollar yen fell heavily after BOJ rate decision, okay? Also, we saw a dollar yen drifting down because of Fed dovishness, okay? So Fed were dovish and BOJ were definitely bullish because they actually wanted to keep their monetary policy steady, and all that leads to risk aversion, okay? Additionally, Fed lowered GDP forecast for 2016 and 17, and if we see a Brexit, this pair should go down, okay? This pair should go down, and I will show you now, okay? Maybe I have the chart, let me see. Yeah, this is what could happen actually. I will explain later. But currency analysis also say that dollar yen, in case of remain, should follow equities. If we see a remain, UK assets will spike. Equities should follow. There will be a risk appetite, and dollar yen 103.50 support should not be broken. This is what should happen. 107.80 should be touched. and reached if we see a Bremain, okay? If we see a Brexit, 103.50 level should be touched again, and it should be broken afterwards towards 100.80, 100.00. So this is the zone that should be reached after we see a Brexit, and on Bremain this should happen. Now this is, guys, you know, I cannot move the market myself, and this is a very strong event. So this is all pre-analysis, because this is not standard analysis. We are not talking about standard session recaps, although for some people it's also hard to even analyze this correctly. So we're not talking about simple, well, simple, not that simple, intraday, intra-week analysis. So you probably know that my analysis is always simple and concise, but this is now what I'm facing for the first time, okay? So this strong event might prove me wrong, right? But I'm still well, I need to say, using the analysis, the fundamental facts, and my own common sense, I am still ensured that this should happen similar to this, what I'm saying to you. So on Bremain, this should go up, this pair. On Brexit, it should go down. These are the levels to watch for, okay? I'm not sure about how strong the impact will be. But let's say that, judging from some historical levels, buyers and sellers, this should be it. Bremain, Brexit. Okay, now FTSE should hit 65.00 if we see Bremain. If we see Brexit 55.00, then 50.00. If we see Brexit, guys, below 50.00, should be a free fall, and floor is the limit. So FTSE will also have an impact, okay? And that impact could be huge, guys. You see, as I say, this is now resistance here, see? And Paris trying to, you see, it's like traders have started to price in that UK will remain. FTSE is going up, and this is inverted head and shoulders on weekly, right? Left head, right? See? Inverted head and shoulders. So, according to technical analysis and now moment price action, traders seem to be pricing in. It's not priced in, but it's like it's being priced in currently, because on a good outcome, I mean good outcome for markets, right, bullish, then it means that FTSE should hit 65.00, and this is it, 65.00, the top of this inverted head and shoulders, and maybe after we see a result during next couple of days or weeks, it could continue going up. So buying the dip. Now, if we see Brexit, this should be tested 55.00, eventually 50.00. Guys, look the history, look monthly chart, guys. What after 50.00? As I said, floor is the limit. This will be a free fall, guys. Okay, this will be a free fall. So watch for that possibly to happen. Now, slight aggression, guys. You can see that dollar CAD is actually going. CAD is also risk asset. What did I say? You probably remember of my analysis today, okay? And I hope that you heed the advice to sell dollar CAD, okay? Because dollar CAD is going down now, guys, and CAD is also risk asset, right? Commodity. So let me just give you This was done with Forex Street actually. So yeah, the analysis was posted on Admiral Markets, Facebook, and here on Forex Street. Okay, so I said clearly sell from POC. Okay, sell from POC, and this was touched, and now it's 35 pip down. See? So that is also, you see, FTSE is going up. Okay, correlation negative, guys. Okay, correlation negative. So we could see 6500 on Bremain, followed by upper levels. Next couple of days after Bremain, and we see a Brexit. If we see a Brexit, this should drop 5500, 5000, and it could be a free fall, as I said, below this level. Okay, so this is it. Okay, FTSE. It says Microsoft PowerPoint is restarting. Okay, let's see. Okay, I will move on to the slide. Okay, here. So this could happen, guys. FTSE. Now, commodity currencies are risk currencies. Aussie, New Zealand CAD. If Brexit happen, they should drop heavily. If remain, they should rally. So ODN should go up. Yen should go up. CAD yen, okay, should go up if we see remain. Okay, so I'm specifically referring to yen pairs. AUD yen, New Zealand CAD yen, pound yen too. Pound yen should also go up. Let's see real charts now, and I will explain. So AUD yen, guys, first we will go with AUD yen. So this is weekly chart for AUD yen. You can see that these pairs are going down, so they are effectively following equities, especially Japanese 225 or so-called Nikkei index. So AUD yen follows Nikkei during Tokyo, DAX during London, and SP 500 during New York session. So this is weekly. Okay, weekly looks bearish, right? But guys, if you see daily, now daily looks bullish. Okay, so again, what does it tell you? AUD yen up. Now just follow me what I'm saying. AUD yen is going up. That means equities are going up, right? Right? And that it means that traders also started to price in a possible remain scenario. Okay, a possible remain scenario. So as you can see, this is going up now. So on a good, I mean good, literally, on remain scenario, it will be probably, well, I think bullish equities. So AUD yen should spike up towards this important resistance now. So we could see a spike towards 81.40 and here actually 81.10. So this could be actually a spike towards these levels because it's already at support, guys. Look, this daily candle actually broke through L5 and closed back inside. Okay, you see here, it broke down, then closed back inside. So this should spike on remain. And if we see a Brexit, we should see a huge drop also on AUD yen. First to this level, and then later the level down below. Okay. Now, then if we remain, as I say, it should spike above L3 resistance that's around 7.05. We see scenario, it should go down below this candle low, 75.58. So try a couple of orders. Guys, please take this with a dose of reserve, because as I said, this is well, I'm not sure big the impact will be, but this is logic, technical analysis, fundamental facts, and possible outcomes. We're just going through this. This is one of a kind event. Okay? It will not happen here, so it's one of a kind event. See here and here, attention to these levels. Guys, pound yen. Also, see the same, guys, is happening. Equities up, pound up, oil yen up. You know why I learned 10 pairs good followers of equity. That means that like the pricing in now BREEAM scenario. So you see, similar to L5, now it closed back with a gap above L5. So this level, it might be broken, maybe even before Brexit referendum, UK referendum. But if we see a remain, this should be reached 159.30. Even, guys, we could see a sudden towards 180. During days, we could see even 170, because again, so-called dragon is moving pair, even much faster than pound dollar. Okay, and if we see a Brexit, this should drop, guys. A Brexit, this should towards again 140, even lower, guys. I might take this level here. Okay, this level 140, and eventually reaching 133. So we should see a drop below 145.42, right? 0.37, okay? 0.37. Below, we should see the pair below this level towards levels. On remain, it should spike. Maybe, as I say, it will spike above 154.80, maybe during the night or next day. But if we don't see before remain, this level should be broken. We see remain, that means UK will stay, and 159, even 165 or 70. So watch for these levels of remain downward level for Brexit. And finally, guys, Euro Yen. Okay, Euro Yen. The impact on Euro Yen should also be, no, it won't be that strong as pound yen or yen, because Euro Yen broke through L5 monthly pivot point and it closed below. So if we see remain, it should go towards, okay, it should go towards this level here. Okay, it should go towards 121.50, okay, because that is the first support, L4. It might go a bit higher on remain, but on Brexit, okay, on Brexit, it should also drop towards, it should drop below this level, 115.48. And furthermore, it should drop towards this double top here, guys, okay, 1.1150, and even here 1.05 on Brexit. On remain, 121.50 could be tested. Then, guys, we need to reassess Euro Yen, because this was actually a very important point for technical analysis. So it should be retested as a part of technicals, simply if we see a remain scenario. One more important thing to add is follow, guys, correlation matrix. Put all of these pairs and watch how they behave. As you can see, last 200 bars on daily, guys, I just marked strong or medium impact. You see DAX following pound dollar. Look at gold. It's completely inverse to gold, minus 50. ORIEN, of course, plus 65, plus 85 on Nikkei. So those are equities, guys. Watch this. Euro dollar negative with Nikkei, but very positive to DAX, a dollar index, negative to gold, positive on ORIEN, positive on Euro yen. And I can also show you, okay, here, guys, you can also see actually we will add pound yen here, okay, pound yen here. You see pound yen, guys, ODN 95%, 95 correlation. Gold minus 85, pound dollar 89, ORIEN plus 79, guys, Euro yen 94, Japanese index Nikkei plus 89, guys, equities. Guys, remember, this is what we are teaching you, what you need to know. Equities are following, actually, yen pairs are following equities. So here you can see correlation. So all of this, what we have been speaking on this webinar could happen. So Bremain, equities bullish, all yen pairs, most of these, ORIEN, pound yen, Euro yen up. Equities up too. Negative scenario, I mean Brexit, okay? If Brexit happens, it will be negative for equities. Equities down, yen pairs down, including ORIEN, Euro yen, pound dollar down, and Euro dollar and Euro yen, limited impact down. I hope that you enjoyed. We're already over the time. So guys, be prepared. Watch this webinar again. It will be uploaded, okay, very soon, maybe even today or tomorrow, and mark the levels that we showed you. So I will be very eager to watch the result, and I hope that it won't have a negative impact on your account, so be careful. As we always say, guys, thank you for your comments. Cheers and trade safe. See you soon.